Hello students, welcome to the massive open online course on money and financial markets. In today's module, we will try to explain the central bank and its various functions. In this module, our primary objective would be to get yourself acquainted with few things. And one by one, I'm mentioning it here. One is this introductory part will take you to the idea of central bank and what are the central banks of various important countries or nations, and how the Central Bank of India, the name I will tell you in a moment, what is the type of organization and the management of the Central Bank of India we observe or we experienced, and then what are the basic functions of a central bank and what is the necessity of having a central bank in a country like India, which is a vibrant democracy. And then we will move to particularly the monetary policy of the central bank of our country, which is the abbreviated version of this central bank is RBI. This is called Reserve Bank of India. When I'm saying that, I will inform you about monetary policy of the Reserve Bank of India. Then the question is that, is there any other kind of policies? I will try to touch upon that thing, but the details of those policies is not going to be discussed here. And then, as usual, you will get to know the takeaways or the messages of this lecture. So these are the primary objectives of today's module. So we'll start with the introductory segment. In the introductory segment, as I promised you to inform you about the central bank. Central bank is not probably, I should say with certainty, that this is the most important, most significant and most influential player of the financial market of any country, the financial market of the entire world. For our country, the central bank, the primary bank, the prime bank, the major bank is called Reserve Bank of India. So the question is it that the Reserve Bank of America, Reserve Bank of Japan are the central banks of various countries? The answer is no. The Central Bank of America is called Federal Reserve. The Central Bank of Japan is called Bank of Japan. The Central Bank of England is called the Bank of England. Central Bank of Russia is called Russian Central Bank. Central Bank of Europe is called European Central Bank. But what's in the name? The functions are almost same. The central bank influences the policies, influences the entire economy. So as a whole, all the central banks influences the whole world and the financial system and the economic functioning of the whole world as a whole. In line with the motives, in line with the targets of international financial institutions like World Bank, like International Monetary Fund, all other things, the central bank work together to achieve a sustainable process of development and pace of development for the entire society, for the entire civilization, for the entire world. Now coming back to the RBI or Reserve Bank of India. It started functioning, you will get to know that it started functioning even in pre-independent era in 1935 on the terms of Reserve Bank India Act. And you will be surprised to know that the Reserve Bank of India was actually a private shareholders institution till January 1949. Remember the date, remember the year. January 1949, it is after independence. So till then it was a sort of private bank, after which it became state-owned institution under the Reserve Bank of India Act. So it is the state means the central government. So this is the bank of the central government, but it should not ideally be controlled by central government. In reality, what is happening, that is altogether a different question, but theoretically, it should not be influenced by any government, be it state government, be it central government. It should not ideally be influenced by any institutions or any political parties. Ideally, this should be an independent bank, and it should control all other banks and the financial functioning. So the organization of this Reserve Bank of India, as you know, there is a all-important person of Reserve Bank of India and which is called Governor of RBI. The governor of RBI is supported by few deputy governors. And these deputy governors are also, they have to assist them the board of directors. So the local board advises the central board on matters referred to them and perform duties delegated to them. The final decision is actually taken by the central board. Then the central board comprises of whom? Central board comprises of governor, 4 deputy governors, and 15 directors. And the directors are actually nominated by the central government. In a democratic setup, the government are the representative of the people, so they should have a say on the functioning of the entire economy. How? The channel is done through the central government, and this channel is completed through the nominated people of the central government. So essentially, these nominated people are indirectly the representatives of you and me, because the central government is the representative of you and me. So the underlying principle of the internal organization is the functional specialization with adequate coordination. At present, Reserve Bank of India has 26 departments and 28 regional offices. The main objective of the central bank is to maintain the monetary stability so that the business and the economic life can deliver welfare gains of a properly functioning mixed economy. Mixed economy means, probably you know, so I'm not going to explain the whole thing. What is mixed economy? This financial stability, I just want to tell you one thing. During the last financial crisis of 2008 and 9, when the financial crisis took place, started in America and it went on throughout the entire world, the Indian economy was almost undisturbed because of the fact that Indian economy had a very good financial stability, very good macroeconomic stability, and this stability was retained and sustained by the central government and the central bank. The central bank is the RBI. So the prime motive of RBI, prime objective of RBI is to promote the development of financial infrastructure of the markets and systems, and to enable it to operate efficiently. That is, to play a leading role in developing a sound and stable financial system so that it can discharge its regulatory functions efficiently. And to ensure credit allocation, so who is going to get the loan? So that should also be directly or indirectly determined and controlled and monitored by the central bank. So to ensure credit allocation by the financial system broadly reflects the national economic priorities. So RBI can intervene and can say, this is the sector where loans should be granted. This is the sector where much more money should be diverted. This time you should spend more money on health sector. This time you should emphasize more on the education sector. This time you should emphasize more on the online digital educational system. So, and how the entire functioning of the monetary system or monetary support should be carried away, that is decided and governed by ideally it should be governed by the Reserve Bank of India. And to regulate the overall volume of money and the credit in the economy with a view to ensure reasonable degree of price stability. And with this objective in mind, then what are the functions of RBI? RBI, the prime function of RBI, that it is the note issuing authority. RBI has the sole right of issuing currency notes other than 1 rupee notes, coins, and coins of smaller denomination. So when I am saying other than 1 rupee notes and coins, so who is going to issue 1 rupee notes and coins? It is not the RBI, but the Ministry of Finance. Ministry of Finance issues 1 rupee notes and coins. Other than this small denomination, all other notes and coins are issued by Reserve Bank of India. So currency notes issued by the bank are essentially the legal tender everywhere in India. So if it is issued by the Reserve Bank of India, everybody is bound to accept it, because it is endorsed by Reserve Bank of India, the central bank. No one can deny it. The bank issues notes in the following denominations. What are the denominations? 5, rupees 5, 10, 20, 50, 100, 500, 2000. 2000, we cannot see much more number of 2000 notes these days, but RBI can issue this thing. It can also exchange notes and coins of one denomination into those of other denomination as and when demanded. Now, all affairs of bank relating to note issue are conducted through issuing department. The bank has a separate issuing department. Currency chests are storehouses where bank notes and rupee coins are stocked on behalf of the Reserve Bank of India. Now, deposits into the currency chests are included in the cash reserve ratio. So, this is the thing that I want to mention very briefly. What is cash reserve ratio? When I am saying that there is a central bank, but central bank has no connection with general public. As a simple person, as an individual, I cannot go to the central bank, I cannot go to the RBI and ask for opening a savings bank account. I cannot do that. So this thing I can do in a nationalized bank, in a private bank like State Bank of India, United Bank of India, Axis Bank, HDFC Bank, but I cannot go to Reserve Bank of India. So when I open an account with SBI, SBI is connected with the central bank and I am connected with the SBI. So SBI is essentially a mediator in between me and central bank. How SBI is going to function, that is controlled by central bank, RBI. And I also have some say on the functioning of SBI because I cannot pursue, but I can request the manager of any branch that please look into this matter, please allow me to have this business, please grant me this loan. But that is being controlled by the Reserve Bank of India. Now the cash reserve ratio is that when I open an account in a nationalized bank or in a commercial bank, I should say, I spend some money, I deposit some money, say 10,000 money or 1,000 money for simplicity, let us assume, then what the bank needs to do, that any day bank can go bankrupt. In that case, I, as a customer of the bank, will be in trouble. So as a guarantee that I am not going to be in trouble, as a guarantee for that, the central bank will ask this commercial bank that if you do business for 1,000 rupees deposited by person X, then you have to deposit certain amount of money to me and I will keep this money on your behalf. So if it is 10%, then if I deposit 1,000 rupees, then out of this 1,000 rupees, rupees 100 must be paid or deposited to the central bank by the commercial bank. This ratio is called cash reserve ratio. This cash reserve ratio or CRR is an instrument through which central bank can control the functioning of the economy. Central bank can control the monetary functioning, money supply of the economy. Central bank can influence the inflationary tendency of the economy. So this CRR is very important thing. Now, earlier till 1956, the proportional reserve system of note issue existed in India. What is this proportional reserve system? Proportional reserve system means if bank wants to run a business, some amount of reserve should be there because that cannot be, put into the normal day-to-day functioning of the bank. And that percentage was 40% of these assets consists of gold coin and bullion and sterling and foreign securities. And then the system was abandoned. Now, the most important part of the central bank. This is a kind of banker not to general public like me and you, but it is a banker to the government. It is a banker to the central government. In case of any requirement, RBI can not only suggest what to do, RBI can also lend some money to these governments, maybe central governments or the state governments. RBI can also lend money for the commercial banks. So it is not only the banker to the government, it is also a kind of banker to other commercial banks. So it provides to the government all banking services such as acceptance of deposits, withdrawal of funds by checks, making payments as well as receipts, and collection of payments on behalf of the government, and transfer of funds and management of public debts. But from 1976, the Reserve Bank of India does not handle central government's day-to-day transaction as before, except where it has been nominated as banker to a particular ministry or the department. But this is not very usual, so it is almost abundant. So also all the state governments and central governments are required to maintain minimum balance, which depends on the relative size of the state budget and the economic activity, but that is for safety and security purpose of various governments, state and the central governments. But that is not kind of, big brother of a family. So in case of an emergency, I will come up with the solution. So don't worry, you just do your work. So, and as I mentioned that, it also manages the public debt. So Reserve Bank manages the public debt and issues new loans on behalf of the central and the state governments. It can issue some bonds. It can introduce some more mechanisms or techniques how to handle with this. And I will come to some other issues later that are more interesting. The debt management policies aims at what? The main target is to minimize the cost of borrowing and reducing rollover risk. The first one is very important, minimizing the cost of borrowing. So why a central bank is interested in minimizing the cost of borrowing? And who borrows money? I, as a person, when I borrow money in case of emergency, I may ask the bank to give me some money for emergency purpose. Apart from that, who borrows money? The investors. So if the investors find that the cost of borrowing money, including the rate of interest, is very high, they are not going to get some money for the investment purpose. So the entire production or employment scenario is going to be, jeopardized in the economy. So Reserve Bank has to ensure that the cost of borrowing money means cost of loan is not so high that the investors or the businessmen feel reluctant to go for new investment, new venture and the business. This thing I mentioned that it is not only the government's bank, it is also bankers' bank. So RBI has a special relationship with the commercial and cooperative banks. Cooperative banks I am not going to touch upon here. So it controls the volume of reserves of commercial banks and thereby determines deposits and credit creating ability of the banks. So credit creation, very quickly, credit creation means if I deposit ₹1,000 in SBI, then out of this SBI, 1,000 rupees, 10% is going to be deposited to the central bank. Another 900% may be used for credit creation. So this 900 rupees may be given to person X, and then this person X may again spend this rupees 9,000 and or can deposit this money to another bank. So out of 1,000 rupee in the second round, in the second phase, 1,900 rupees credit is created. And then out of this 900, that bank has to deposit 10% means rupees 90 to the RBI. Then another 810 rupees is going to be spent for some other purposes. And someone else is taking this money and spending or depositing this money to, say, Bank of Baroda. And this Bank of Baroda is again putting this 10% to the RBI, that is rupees 81, and the remaining money is going to be used for credit creation. So always from a money of 1,000, more than 1,000 money is created as credit. And this is again controlled by the Reserve Bank of India. And in doing so, the Reserve Bank of India hold a part or all of their reserves with the RBI. And similarly, in times of need, the bank can borrow funds from the Reserve Bank of India, as I mentioned before. Thus, the RBI is also called the lender of the last resort. So that's not the end of the story. So these are directly functioning directly intervening in the functioning of the commercial banks. The bank also supervise the functioning of other banks. So RBI has a vast power to supervise and control commercial and cooperative banks. It has in this field the following power. So RBI issues licenses for establishment of new banks and to issue licenses for setting up of bank branches. And it also takes care of how other branches are going to be expanded there on mobilization of deposits by banks. As all of us know that money laundering and fraud in banking system is not a very unusual thing in Indian system. So these things are also supervised, controlled and monitored by Reserve Bank of India, and which is definitely very important task for any central bank in our country. And more importantly, RBI also controls appointment, reappointment and termination of appointment of the chairman and chief executive officers of the private sector banks. So from there, we also have sort of apprehension that maybe RBI is not a kind of institution that should not be blamed for any harm or any corruption in the banking system. It may be that the RBI didn't have any information, or it may be they were overlooked, or there are some other channels that the criminals they used, or the frauds, banking fraud, the people involved in banking frauds, they tried to bypass this mechanism, tries to bypass the channels or the safety nets developed and devised by the Reserve Bank of India. So I'm pretty sure that RBI will also come up with some more stringent safety nets to control all these issues. And in case of exchange rate, RBI also plays a very important role because, in an economy, we may have various types of exchange rate system. You may have fixed exchange rate system. You may have flexible exchange rate system. We may have managed exchange rate system. And another important thing is the Foreign Exchange Act. So there are a lot of people, it is possible, but it is not possible in a transparent way, which is called a sort of black economy. Some people may have much more amount of very good amount of foreign exchange, but that should not ideally be the case. The foreign exchange, if a country has, that should be reported to the Reserve Bank of India, and RBI should have each and every information about the foreign currencies that the Indian nationals have. Apart from this thing, it is also act as a formulator of prudential norms to preserve and enhance the stability of the banking and the financial system. RBI has also been rendering developmental and promotional services which have strengthened country's banking and the financial structure, and we got the benefit of this thing. We got the dividend of this thing during the financial crisis of 2010. And in fact, we also got the dividend during the last COVID time, because Indian economy was disturbed, was hampered, jeopardized, but not very badly like any other economy of the world. And as I said, RBI has been initiating reforms in payment system, UPI, digital payment system. You have, say a popular thing, Google Pay. You have Phone Pay. You have Paytm. So you also have some digital currency like cryptocurrency. So all these things need approval and endorsement of the Reserve Bank of India or central bank of any other countries. And then the most important part of activities of RBI is the initiation or introduction of NABARD, National Agricultural Bank for Rural Reconstruction and Development. Indian economy is primarily dominated by the agricultural sector, and RBI actually established this Agricultural Refinance Corporation, which is now known as NABARD from 1963. That takes care of the agricultural problem and also takes care of some other issues, even research and development programs that is associated with agriculture and rural areas, which is a very welcome approach and initiatives taken by the Reserve Bank of India. Apart from that, RBI also takes care of industrial finance, also takes care of the credit delivery mechanism, who should get the money, who should get the loan, who should not. If it is credit defaulter there, how these things is going to be handled. So this is also determined and discussed by the RBI with other commercial banks that are directly associated with different general public. And the monetary policies that RBI is responsible for to help in achieving the financial market stability, this thing I mentioned, controlling the expansion of bank credit, I also mentioned it. But the important part is the containment of inflationary pressure. Inflation is something that is very bad in the long run because that often discourages people to invest more, discourages people to buy more, and the real income goes down, and that may have a long-term ill effect on the economic functioning in any society. So RBI can also control this thing. And these are other issues. The boosting of the level of exports. Export earning is very important for an economy. And the promotion of food procurement operation, RBI also takes care of this issue. And then with this backdrop, we are almost at the end of this lecture. So in a nutshell, what are the takeaways of this central bank and functioning module? The first one is that RBI serves as India's central bank and it carries out a number of tasks essential to what? Essential to maintaining countries' monetary system. So only monetary system. There is another thing which is called fiscal system. So this is not controlled by Reserve Bank of India. Number two, among its many other functions, a central bank like RBI performs the duties of government's banker. So it is bank to the government and controller of the public debt and lender of the last resort for the commercial banks. Number three, the government and the RBI both have their own areas of responsibility, with the government concentrating on fiscal policy and the RBI concentrating on monetary policy. The government fiscal policy means that talks about the budget and the provision of budget. And the money and money supply, it is the duty of the Reserve Bank of India. And there are various monetary instruments that are used by RBI and which probably we will discuss in another lecture in great detail. So till then, thank you very much. So hope that we will be able to discuss more on the monetary policies of Reserve Bank of India and you will enjoy those monetary policies. Thank you very much.